Alrighty, ladies and gentlemen, it's been a long time since I've done a live stream, and look, I've got a brand new studio set up, as you can see, or well, brand new living room set up, I should say. And what better occasion to jump back on live on my own YouTube channel than to talk with my good friends Charlie and Miguel, and we're going to talk about cryptocurrency in 2023. And the reason we're talking about that is because, well, the reason we're talking about crypto specifically with these two gentlemen is that Charlie and Miguel are two men that I go to personally for basically all of my cryptocurrency advice, insights into the market, insights into what new projects are hot, what new projects are coming out, what new coins I should be paying attention to, what more importantly, what things to not pay attention to, so I don't waste money. I don't blow my money on some stupid Ponzi scheme or some shitcoin. So yeah, that's what we got going today, guys. It's been a long time since I've had you on, so maybe you guys could quickly give my audience a bit of an introduction about yourselves, your background, and what's coming up very, very soon.
Yeah, for sure. So yeah, my name is Miguel, Dollar Cost Crypto. I've been in the crypto space since 2016. And pretty much me and Charlie co-founded Crypto Mindset, which is the biggest cryptocurrency course in the world. We've educated, after today, I would say almost 13,000 people, which is really cool to say. And, we've been able to help a lot of people make sure during this last bull and bear market, not for them not to really get rugged and keep assets safe and stuff. This is one thing we're really proud of. We had a lot of people that we knew, like friends of friends, who were in a lot of these kind of Ponzi coins, and we warned a lot of people to get out of it, but people got really greedy, and it ended up costing them pretty much their most of life savings, basically. It's kind of, but that's kind of the way of cryptocurrency. But there's safer ways to do it.
Yeah, right.
And my name's Charlie. The YouTube channel is Cultivate Crypto. Since 2019, been helping people basically get into crypto and understand it from just, like an honest to goodness perspective without any bullshit, basically, because there's a lot of information out there on Twitter, YouTube about crypto that's just absolutely false. Some of it's, media related FUD, fear, uncertainty, and doubt, where basically the traditional media, just shits on crypto all the time, right? Trying to dissuade people from getting into it. But also within crypto, there's people, pulling bad stuff basically to try to take your money. And so and a lot of the reasons for that is because people get paid, right, from sponsors, right? They get different sponsorships that will basically tell them what to say. And we don't take any sponsorships ever, right? We've never taken any sponsorships. And why that's important, right, is because then we can give you the information, right, that we think, from ourselves honestly. And, sometimes we're wrong, right? But a lot of the times we're right. If you follow our information, you'll see that. And, I think that's something which is sorely lacking in the financial space overall. So we do that for crypto specifically. In terms of my background, I'm originally from Minnesota. I lived in Tokyo the last 13 years. I moved back to the United States, to Vegas last November. And I was a corporate recruiter in Tokyo, helping people helping companies to come to Japan, like international companies, like American companies, European companies enter Japan. And then also I was helping Japanese companies go overseas. So and then before that, I was an English teacher in Japan. And so right after I graduated university. And so basically I like to mix both, business and education, how to make money and how to succeed in life. In addition to, teaching you that in a very structured way.
All right, excellent. Now, it's funny because I got, obviously, I've known you guys the longest, and you guys have been my first, experts that I would go to for any kind of takes on the cryptocurrency market and various projects and things. And because of my, my connections these days, I have access to a few other guys who teach this stuff now as well. And it's funny whenever I see like what you call convergent knowledge between you guys and some other friends of mine who teach this stuff, and you guys don't know each other at all. And so I quite like when I see, you guys saying, okay, the market's looking very, very bullish right now, or it's looking very bearish right now. And then I compare that with my other friends who are doing the exact same thing. And to me, that says that you guys know exactly what you're talking about, and you have the ability to kind of at least no one can predict the future, but you can at least see a general direction of where the market is heading. Now, correct me if I'm wrong, but we're not really in like we're definitely not in another bull run right now, but we're in like, it seems to be, we're either at the tail end or, still somewhat in the middle of like a relatively mini upward trend. Is that correct?
Yeah, we're like in a resurgence kind of. So like we're kind of, like history doesn't repeat itself, but it rhymes. We're kind of getting we're basically repeating 2019 in a weird way. Like in 2019, we ended up in February 2019, we got the all-time low for Bitcoin. That was like $3,100, and with a good amount of time within that year, Ethereum hit about $80 as its low, right? And this time around, right, we were within 2019, right? We hit the lows for Bitcoin, and in the same year, Bitcoin hit $14,000 again.
3,100 to 14,000, which is a good move,
right? And it all happened basically between 3 to 4 months. And what we're seeing right now is we're seeing the same thing. We've gotten Bitcoin to bottom at $15,500. We got Ethereum to bottom at $800, depending on the exchange, $888. Shout out to the Chinese.
And so, there's a few things that I find. Oh, sorry, go on. I don't want to cut you off, Charlie.
No, I think Miguel froze there for a second, then he was coming back.
Oh, okay.
Yeah, so basically, we bottomed out now, and we're kind of repumping back up, but it's basically like a short-lived pump. But this is kind of normal for what we're seeing in the cycles and stuff. So, we're basically looking right now about like $38,000 to about $44,000 for Bitcoin this summer, and we're seeing about pretty much retesting all-time highs on Ethereum. If Ethereum didn't do these major upgrades that they did pretty much this year and last year, we'd pretty much just see Ethereum hit like $3,000, and that's it, right? But because big upgrades that happened to Ethereum, Ethereum 2.0 and Ethereum 2.0, and then all the staking and unstaking that you can do now finally, and from going from proof of work to proof of stake, now we can, like, the fundamentals are so good on Ethereum that if we get a big upwards move, Ethereum pumps a lot better than Bitcoin for a short period of time. And that short period of time means, like, holy crap, that kind of brings back altcoins for a good like 3-4 months. Yeah.
And is that upward trend of Ethereum because of the new staking model, whereas there's basically just less in circulation, so it causes the price to go up?
Yeah, pretty much. I mean, like we like, this is how crazy it is. Like before this upgrade, Ethereum was basically, printing about 8 million Ethereum tokens per year. Now, all it's printing out right now is about 600,000 tokens.
Okay, that's a very big difference.
Yeah, it's a pretty huge difference. I mean, we're talking about it like it's been a reduction in selling pressure on Ethereum by $8 billion a year.
Jesus.
Yeah.
And what that caused was last summer, right? Ethereum in June of 2022 hit its bear market low at that $880. Bitcoin took until December or November to hit its low at 15,450. And so that has never happened in crypto before, right? We've had times where some altcoins or some coins that are not Bitcoin start moving in the market before Bitcoin a bit, but usually not by 6 months, right? And then also Ethereum specifically, right, tends to correlate a lot closer to Bitcoin. So this change in fundamentals with proof of stake essentially starting to change that. And so that's on the bottom side, right? So then on the top side, right, there are possibilities of Ethereum to hit all-time highs sooner than Bitcoin. And if that does happen, right, then you're going to, once you hit an all-time high on a coin, basically it's kind of like going out of orbit and you're in space. There's no resistance anymore. You can fucking just go, right? And so the price of Ethereum, if it gets to an all-time high sooner than Bitcoin, if it happens within this year, I think it'll be like a little bit of a run. And then, it's a time to take profit. That's a sign for profit taking, in my opinion.
Yep.
But if it happens again towards the end of a bull cycle, right, that's something also that's never happened before. And that will be something that I think you probably won't hear from 99% of crypto people right now, because to be honest, a lot of them aren't even considering that possibility. And one of the things we like to do in the course is give you guys history, give you guys knowledge, understanding of what's happened in this space and what's going to happen. And then we do this thing called wargaming, where basically we're like, hey, here's a possibility, right? And then we'll play that possibility out. And how would you basically strategize to protect yourself on that side, or, maximize to take profits, basically. And, a lot of hedge funds out there do this, right? They'll basically talk about what ifs, and if, and then basically have different strategies in their back pocket. That way, you have your main strategy, you have a few tools that you're going to do, but then like, if anything does happen that's a little bit unusual, right, you're ready for it, you're prepared for it, you're not caught off guard. Whereas like most of the market will be caught off guard. And so then even if it's just a slight change, a lot of those people that get caught off guard tend to either lose money or are not able to maximize the money that they're making. That makes sense.
Yeah, and so and these are the kind of strategies that you do talk about in your Telegram groups.
Yes.
For people who do have access to your crypto mindset community, you're giving them like sort of heads up, and I guess these various strategies you just talked about, like playing these war games. If X happens, then Y. If this happens, then it's time to take profit. Like to help people kind of minimize their losses. Is that correct?
Exactly.
Yeah.
Or maybe not minimize their losses, but like lock in their gains is the correct way to say it.
Both.
So
yeah, because like you can't make crazy gains without having risk management. Right. If you don't take care of the risk side, you're probably gonna get wrecked.
Yeah.
Right.
And you need to make up these like strategies and stuff, as well as like give people like war games on these things, because what we tell is like, these are the possibilities right here. If it goes this way, we can do this. If it goes that way, we can do that. And because we kind of prep our students to hear, and we tell them all the time, look, we're telling you this is the possibilities of which way they can happen. Now you've heard it before. Now you can react faster. The problem is most people, like, they don't even have a plan. They just get punched. Mike Tyson's like, everyone has a plan until they get punched, right? Well, a lot of these guys like don't have a plan and then they get punched.
Yeah. I mean, I've seen people like go through this cycle with especially with like shit coins, right?
Yes.
Where they'll YOLO into a shit coin and then they won't really pay attention to it, and it'll pump, and then they'll just hold on for dear life, hoping that it's going to pump more, and then they lose everything. Then there's someone's exit liquidity later on once it drops again.
Yeah. Yep. I mean, cryptos become the reason cryptos are so good. It's like mixing everything. It's mixing a stock with a religion with a football team. All three together. It really is that, because
computer science, history of money, like so many different fields that nobody is an expert in them all, but you have to be you have to know a little bit about a lot to really understand this space.
Can you dive into that analogy a bit more? I want to go into that. So you said crypto is is about a mixture between a stock, a religion, and a football team. Can you explain each of those components?
For sure. So a stock's basically it's a representation. It's basically a representation of a company, right? So no matter what anyone says, most people think of coins as it's sort of like it's a stock, right? Because everyone knows what a stock is now. So they see the stock ticker. They when they buy a coin, they feel like they have ownership of it, and it can go up and down, right, in price. Then you have a religion, because what ends up happening is it becomes sort of like these sayings like this coin goes up, so it's like it becomes sort of like what I meant by religion / football team is like if I'm in this religion and I back it, and this is even with stocks like you see only on the most popular stocks on the stock market, but something like Tesla. Tesla's like, oh, Tesla only goes up, baby, we're the future and stuff, and this is why Tesla became the most successful stock recently, and this is why it drove like Elon Musk to basically become the richest person on the planet, other than the sheiks. Shout out to the boys, but oil money long, baby. But besides that, right? Normally, right? Let's just say in American football, or as an example, or worldwide whatever soccer is or football around the world, right? When Manchester United fucking wins, right? Woo! You go home, you're happy and stuff, but you get nothing. Like at all, right? Imagine if Manchester United won, and every time they fucking won, you won more money, and you got richer. Yeah. Holy shit! How much? Then that's what I'm saying. It turns from a just a soccer team or a football team into a religion at that point, because it's not only just like, this is my boys, this is my family and stuff. We got a stock ticker out here. We're improving the world, and everyone thinks that their coin does something really, really special. And most coins do, but it's a competition because a lot of coins have the same sort of thing. So it's all about marketing, outreach, more people, and you end up eventually having sort of a Coke and Pepsi model, usually in a lot of indices, because have you ever heard of the Coke and Pepsi model?
Yeah.
Yeah. So pretty much, for the guys who don't know, it's basically in most industries, you usually have a first place and a second place, Coke and Pepsi, and then you have a couple other like side players, like 2 to 3 extra players. So in most markets, you have about 4 to 5 companies control the entire market share, 95%. That's how it works in America, and that's how it works in most other countries as well. And especially as they a lot of countries kind of adopt capitalism and stuff, or having a quasi version of capitalism, that's usually what ends up happening, is that you have 2 dominant players and then 3 minor sub players, and then that's the whole market basically.
Yeah.
So what ends up happening is, as your coin goes higher and higher and higher, woo, everyone gets louder and louder. Everyone's stunting, everyone's having fun and stuff, and then that attracts even more people. So it causes something called a positive feedback loop, where these good things happen to me, and I'm making more money. More people want to join up because they're making more money. But then when you have a positive feedback loop, this causes a negative feedback loop. So when it's crashing, oh shit, I'm losing money. Oh fuck, this guy got liquidated. Oh no, I'm getting poor. Oh my god, I need to borrow money from my mom. Oh no, I lost my mom's money.
Except in crypto, right? We have this kind of parabolic network effect, right?
Yes.
Which basically causes technology, which is being heavily adopted, right, to grow at kind of exponential rates. And crypto's growing at a faster rate than the early internet, right? And so what that does is, any of these times we have these up moves, they are big in crypto, right? And then anytime you have those down moves, right, they're limited, right? Bitcoin right now, right, has shown throughout its history that likely in the next time we have a crash like we did last year will probably be about 2026, and it probably won't be any more than 75%, right? Over time, the amount that it goes down is less because the asset essentially gets bigger. And so, over time, it's a little bit more stable, by comparison to its past, but, it gets people used to Bitcoin, and that's why Bitcoin is the most trusted asset in this space as well.
Right.
I mean, that ties in. I think that ties in quite well to this guy's question here. Do you think that the cycles will become longer in the future?
So this is interesting, right? So there's 2 different types of cycles which are really important in crypto. One of them is 60-day cycles, right? So that's where every 60 days there's a low to low that you're measuring. And if it's basically the second low is slightly higher, then you're in a bull trend. If it's lower, you're in a bear trend, basically, right? And with those, we actually took, there's a guy named Bob Lucas out here who came up with this concept of 60-day cycles. And we took that data and we actually crunched it, like with all of Bitcoin's past history. And we looked at all past cycles for Bitcoin. And what we found, which was really, really interesting, was back in, I think it was 2015, right around that time when Bitcoin went from basically in 2013, $1,000 back down to like 150. Before that, the 60-day cycles were about actually 40 days. And then they shifted, like within that period of time, boom, all of a sudden 60 days. I have a few theories as to why that fundamentally shifted, right? Part of that is going towards mass adoption, or more adoption in 2015 than they had any time before that. And so what I actually expect in the future is for cycles to lengthen. So right now, cycles are about 60 days, but I could see them, in like a decade's time. At some point, if there's a fundamental shift, like we get like a big wave of mass adoption, let's say in 2028 or something like that, where all of a sudden it's like a 1998 moment for the internet in, let's say, 2028, then that could lengthen cycles again, and then make Bitcoin in a bear market essentially only go down from the all-time high, maybe like 50% at that point.
So as a benchmark for everybody who's listening, so what are the all-time highs of Ethereum and Bitcoin right now?
69,000 for Bitcoin, pretty much on the dot. And depending on the exchange you're looking at for Ethereum, between $4,800 to $5,100, because some exchanges had it like slightly different prices for Ethereum at the time.
And so you talked about this a minute ago. So your theory is that basically if we see Ethereum break like a new all-time high, then expect basically a new altcoin season to be in for like a little bit before we see a massive drop off.
Yes.
So there's something. So shout out to Richard Hart, but there's something he coined called Heart Law or Heart Theory, which has to do with liquidity pools. So you know how Uniswap. I mean, you know how Uniswap works. Yeah, you just you can do it on the phone or on the laptop through a MetaMask, and you use Ethereum and everything like that. But in the background, people are basically lending money to a pool. They get fees. And the way it works is it's kind of like a teeter-totter, right? It's kind of like a teeter-totter like this, right? You have to have equal amount of a coin, both in dollar terms. So you have to have $100 here and $100 here. And what happens is as a coin goes up in value, like if a coin goes up like this, it will sell this coin off and buy the other one to make sure that it keeps it in balance. Because there's so much money in Ethereum coins, what ends up happening is that when Ethereum starts shooting up in price, it drags the rest of the fucking market with it as well. So you have this crazy thing right now through Hart's Law and stuff that the higher, like, let's just say if overnight I doubled the price of Ethereum, I would basically double every coin in crypto overnight, right. damn near overnight. It's usually within an 80% of it. So it's sort of like this weird thing where 80% of the coins get the pump, right? And then that last 20% of money gets kind of concentrated on the top 300-400 coins. And this is why you have that's why you have some, and that's the rub there. 80% of the move is given to everybody, and the last 20% of money, which is billions and billions of dollars, that gets concentrated in a couple coins, and that much money turbocharges. That's how you're able to get these crazy coins. So like if let's just say over this next 2-3 months, we believe we have Ethereum basically reach, let's just say $4,800, right? Touches it for a second. That's almost a tripling in the price, or a 2.5 times in the price. And that would basically mean, like, if we choose the right coins, some of our coins will do something like a 4 to 5 times current prices minimum. Now, some coins underperform, but even the ones that underperform are doing really, really well. And that's the whole thing, because it's unlike other markets. When Bitcoin moves up, the only coin that can really move Bitcoin, move Ethereum, is really Bitcoin. Or if Ethereum really shoots up, it kind of does move Bitcoin a little bit, much less, but it does move it. So when you have Bitcoin and Ethereum fucking doubling in price, it's trickled. It's sort of like unlike Reaganomics and stuff and how the real economy works, but because everything runs on liquidity pools in crypto, you actually have trickle down economics. It's really weird. It's a very interesting system we have, and it's really nice actually, because when Bitcoin and Ethereum move, so we've set the system up that if we get boomer money injections, that means if we one of the big events that we're hoping for in the next couple of years, especially as we get the SEC, the head of the SEC out, Gary Gensler out, is we're going to get a spot ETF, which means we can allow 401ks and basically investment funds, as well as like your regular like IRAs, to start investing into Bitcoin. And when they buy Bitcoin, the spot itself, once it runs out of Bitcoin, it goes into the open market, it buys more Bitcoin. And this pumps the price of Bitcoin up. So eventually we'll start getting in retirement money in crypto, which is happening pretty soon. And it drives the market up, which drives Ethereum up, which pumps the whole fucking market up. So it's actually a way to trickle down boomer money into, I guess, newer generations. That's why we're so excited about crypto. On top of that, most coins fundamentally have a much more strict and set basis for how coins are given out. For a lot of stocks, you can actually create something called, even though stocks are paper, but like paper stock, you can create you can create more gold than there is gold, because there's paper gold contracts. You can actually create more stocks than there actually exists and stuff. This is how you were able to get things like GameStop, basically, where like there was more money being lent out to like long GameStop or short GameStop than there actually existed. So that's why like these guys were super afraid, because it would cause a spiral out. And like this is why Citadel and all these guys were like, oh fuck, if this thing implodes, we're gonna go to zero, basically. Yeah, gamifications. And look, that's what I'm saying.
That's a good.
And that's on the safe side, and that's on the stock side.
Right. Well, I was going to say that's a good point, right? Because everybody has this concept of the stock market being safe, right? Whereas, to be honest, if you really understand crypto, right, you know how to avoid the bullshit, right? The crypto space can actually be a lot safer, because you actually own your coins, right? This is what we teach people, is to be DeFi native, so they own their own coins. But yeah, even it was a superintendent of financial services in New York the other day. She was being asked by Maxine Waters in Congress, like, hey, was the reason why basically we had a banking collapse here in the last couple of months, with like, for example, Silvergate and Silicon Valley Bank? Was that because, you know, crypto is a systemic risk to the system? And the person from New York was like, no, like that was mostly 80% like all traditional money. And it was actually like somewhat of a planned demolition. So we got, basically she was saying, right, we have a bunch of vultures here in Wall Street that are preying upon people, you know, pretty aggressively. And that's been something that I think is starting to come to light a lot. And people knew it a lot in the past, right? But now that there's another market that's a competitor to it, people now have another option to, you know, play in a different sandpit.
Right. Yeah, and that's what I really personally like about crypto is like it's the traditional stock market is very, very heavily skewed against, you know, like younger people. It's like a bit of an old boys club, and there's all this kind of fuckery going on behind the scenes, which causes bank collapses, it causes businesses to collapse, and things like this. And yeah, I mean, you might look at like the risk, the volatility of these things typically is obviously not as big as cryptocurrencies, but it's still susceptible to collapses.
Yes,
and it's lined with this. It's sold to you with this veneer, this polish of safety, and it's trustworthy and it's secure. And it's not, motherfucker. Like you look at the people who are pulling the strings behind all this shit. All these Wall Street bankers are just trying to screw you over. They're really trying to screw you over. So that's the thing I like about crypto is that like you said, it's your, if you manage your crypto correctly, if you have it in your own wallet, it's your coins, and you decide what you're going to do with them. They're not. If it's not, as long as it's not in an exchange, it's not going to blow up and disappear overnight. Right. You can't like, and it's like we're going to have like a bank run kind of situation. So
right. And that's what scares, and that's really what scares them. Like,
yes,
because this is how they make money. They make money being middlemen. Like this is why stocks don't perform as well as cryptos for the most part. There's of course some high flyers here and there, of course, right? But it's because everyone leaves all their stock on an exchange. When you go to Robinhood, you don't own the stocks at all. It isn't like, I mean, there is ways to do it if you go through some brokers where you can actually tell them, hey, mail me my shares, and they will mail you your shares within 2-3 weeks. You'll get your shares, but almost no one does that, at all. Like damn near 0%. In crypto, when you hold your coins, the exchanges can't lend Bitcoin they don't have. There's only a limited supply of Bitcoin. There's only a limited supply of Ethereum. This is what it makes it so much safer, even though like no matter time after time, how many times they try to collapse crypto, because they've intentionally tried to collapse crypto many times, it doesn't die. Like right now, stocks aren't doing that hot. Real estate's going down. The Federal Reserve has increased interest rates from fucking 0 to like 5% now, and we're pumping off the bottom. And every other industry is like, and these boomers are like scratching their heads, like, what the hell? Why is this thing still pumping? Right. And it's basically off of that right there. It's because because it's global market as well. If the United States starts printing money, other nations have to print just as much money in order to make their currencies just as weak as a little weaker than the dollar, so they can keep trading internationally. And all this glut of capital has to go into assets. So what people do eventually, because our market's only $1 trillion, right? It's $1 trillion market versus 10 to 12 trillion for gold versus 200 trillion for equities versus real estate being like a $quadrillion market basically worldwide. Then you know what I'm saying? It's a very drop in the bucket. So when they print so much money, more capital goes into crypto, and it doesn't take much money to start pumping it basically.
Yeah. And maybe can you explain, I guess, to people some of these different correlations that you pay attention to? So I know you've talked about interest rates. You know, you talk like how much money they're printing off and how that affects cryptocurrencies, like the strength of the dollar, how that affects things. Like we talked about how like basically everything is correlated to Bitcoin. So Bitcoin moves up or down, then that means Ethereum moves up and down. That means all the altcoins move up and down. So yeah, what are some of the key like correlations that you pay attention to outside of the actual cryptocurrency market that affect the cryptocurrency market?
You want to tackle some, Charlie?
I think we're both going to have like, because there's a lot of different stuff, right, that you can do. One thing that's really simple is if you look at essentially the S&P 500, right, the NASDAQ 100, and the Dow Jones Industrial Average, right? If you look at those three, if they are like basically all moving in the same direction with each other, like really, really strongly, the chart looks very similar. Let's say they're all dumping or they're all pumping, right? that will actually cause a strong move in a lot of different markets. It'll have a ripple effect because globally, a lot of people are looking at the United States stock market, right? And so for crypto, there are these moments in time, or Bitcoin specifically, there's these moments in time where it does its own 4-year cycle, right? It has its own fundamentals, but it will either get a headwind or a tailwind based on those three, right? So let's say Bitcoin's in an uptrend. Those ones are all kind of doing different things, but then at one point, all three start going in the same direction. Let's say that's down, but Bitcoin's still in a solid uptrend. For Bitcoin, that won't necessarily turn it into a pretty like full-blown downtrend. What it will do is it will give it a headwind. Bitcoin will kind of crab sideways and kind of come down a bit. And then once that correlation breaks, then Bitcoin will be a little bit more free to do what it wants. This also is true over weekends, right? Where basically Bitcoin is free to play because it's 24/7, nothing else is. So when the traditional market turns off, right, crypto starts, kind of doing its own thing. And like, so if we end the week on a very positive note for the stock market and those three assets, then what often happens with Bitcoin is it just, it basically gives it like the green light. It says, do whatever the hell you want this weekend, Bitcoin. You can pump like crazy. And so if it's already in an uptrend, it will.
Yeah. And
that's really interesting, that part. The fact that the traditional trading stops on the Friday evening and Bitcoin keeps going through Saturday and Sunday. I've never heard anyone say that before. I like that.
Yeah, and the other thing in terms of other things that we're watching, right? Obviously, interest rate increases from the Fed. This now it's what the most important part of that is basically the initial move. So if the Fed hasn't been increasing rates at all, and then they start moving up, going up means bad, going down means good. So that means if interest rates go down, that means cheaper to borrow, means more money. Let's Ponzi this shit up, right? Right. Versus if interest rates go up, means more expensive. It's more expensive, harder to get capital. People start becoming more careful about where they're allocating capital and stuff like that. And this is why, we mostly see you mostly see more conservative, like right now in the market, because the interest rates are going up. We're only seeing more conservative money going to coins that people really believe in. So you're getting only coins with real strong communities being able to have the prices actually go up slightly and actually move. So you have Bitcoin, Ethereum, you have Hex, and you have Phantom, and you have basically things are very allied with Bitcoin, Ethereum, and the L1 and L2s, and a couple other coins, Dogecoin or something, even though it's Elon Musk coin basically on Twitter, but that has a giant community. And every time Elon Musk says, don't be able to Doge, and he puts Dogecoin as the figurehead for Twitter, the coin pops off 100%, 200%, so those coins make it. But all the real big Ponzi sort of really crazy coins, they're not really popping off yet because it takes Ethereum. The main coin of the whole ecosystem is Bitcoin and Ethereum. This is kind of I say, is our Chuck E. Cheese tokens. It's our tokens to play the games. And when eventually Bitcoin and Ethereum really double in price or really go up high, then people start taking their Bitcoin and Ethereum, trading in for shit coins, essentially playing in the actual more realistic coins, or they could go take that Bitcoin and hit the scratcher and the lottos and the kind of the gamble tokens, right? So one thing that I'm really focusing on right now is basically, because the Fed is increasing rates over time right now, because we've gotten used to it, it's not really affecting crypto very negatively. It is affecting all the other markets more negatively because we already got kind of punched in the face. We already got punched pretty hard in the face already, because anytime there's a big move in the market, crypto reacts to it much faster than other markets. But first one down, first one up. So we were the first market. So once the Federal Reserve increased interest rates for the first time, I think it was 50 basis points, we whoa, that was pretty much, and that pretty much was the end of the bull market right there. That happened basically November to January, in that range there. Once we topped for Bitcoin, the Federal Reserve, hey, we're going to increase interest rates. No one believed them. They did 25 basis points. We're like, oh shoot. It kind of started going down a little bit, very slowly. And then once the Fed started going, where they kept increasing, crypto just nuked down, right? And then you had a lag effect, and then later on it affected stocks right afterwards, and then right after that it started affecting, 6 months later, it started really affecting real estate after that, because people didn't believe it. So there's kind of crypto's the fastest, then stocks, then real estate, in that order. So then when it recovers, it's then crypto, then stocks, then real estate. So in that order and stuff. So it takes like real estate's really the slow moving giant in the economy. It's a big portion of the economy. I mean, like somewhere between 25-40% of the economy is some way related to real estate. I mean, from concrete, steel, that pretty much covers. I mean, just building buildings already covers a ton of commodities. And on top of that, that covers oil and gas in construction in that place, and then from there, labor, people building these buildings, painters, rehabbers. Everything you can think of, insurance. Like if housing goes down, it affects everything because it slows everything down. That's like I really believe like real estate is actually the real brakes, the real gas pedal, or the real brake pedal on the economy. Basically, if real estate's doing really well, there's nothing breaking off the economy. The economy is just rolling. Basically, this is why like places like China, they know that, and they focused so much money into pumping real estate. But then if you pump your real estate market too hot, you get a 2008, and it's big trouble. So it's like this weird thing where you need to kind of like let it run, but pump the brakes here a little there so it doesn't get too hot. And so basically with all this stuff that's going on there, I mean, the Federal Reserve is going to increase interest rates about 2 to 3 more times. So the reason that I'm pretty confident that we're running into the summer, we're going to run hot into the summer for crypto summer, is because we're getting an interest rate in next month, then June and July, right? So typically when the Federal Reserve says finally, hey, we're no longer increasing interest rates, stock market crashes every time. You can go look it up. Anytime there's a movement change from like once the Fed drops the rates to 0 and stops, crash, or they increase rates and stop, then crash. It happens every direction. So anytime it's like moving a boat. Imagine like you're running really fast and then you hit a brick wall. You just bounce off. That's how the market affects it. But once people get used to it, then the market calms down basically. So we're pretty much seeing when the Fed pauses in either June or July, nice little 10% stock market crash, little crypto crash there. And then after that, it's kind of pretty smooth sailing from there because they're greasing up. They're printing a lot of money right now to be able to resuscitate and keep these banks from having bank runs right now. You know,
hooray! More money printing, yay! Favorite thing.
That's going to end well.
It always ends well. That's never happened before in history, ever.
Oh, never.
Let's talk a bit about, your favorite kind of. I know you're a big fan of this community, Miguel and Charlie. Let's talk about Hex and let's talk about PulseChain, because to me, PulseChain in particular is a very, very interesting project. And I'll give my opinion, and then you, the actual experts, can chime in and see if I'm talking out my ass or not. So most altcoins don't typically like last through like multiple cycles, right? And Hex has just gone through one, and usually with what people typically classify as like shitcoins, right? It's really just like all hype, all marketing, using like influencers, like you said, to try and pump a coin's price up, and then everyone who comes along after that is the exit liquidity for the original project creators and all these people that they used to shield the coin in the first place. So then everyone just becomes their exit liquidity. Now with Richard Hart, with Hex, he's put a lot of time and effort into creating PulseChain. So he didn't just make a bunch of money and then just poof disappear, right? He didn't just turn his entire community into just a cash grab. And he's now using a lot of his funds to create this new cryptocurrency PulseChain and a new entire ecosystem. And it's kind of like, if obviously we've had similar things like this before. There's been other projects that are similar to this, but anytime you can create a whole new ecosystem, it just gives you another opportunity to get in at the very, very beginning of, potentially the next Ethereum, things like that. Am I on the mark here, off the mark here? What do you guys think?
Yeah, you're on the mark. You're really on the mark. Yeah, and you're 100% right about saying Sterling be over here pretending he doesn't know about crypto, man. This guy over here wheeling and dealing. What are we talking about right now?
He's been studying. He just does. He's like, I'm a nerd, but I'm not a nerd.
He's like international player.
I can't steal your nerd cred. I got to let you guys shine.
There you go. We lead into turbo dorking it out, so no worries.
It's kind of funny though when we do hang out with a lot of these crypto guys. They're pretty basically we're like crypto chads when we meet these guys in real life. But like, because we hang out with the red pill guys, we hang out with you, Waller, and stuff like these like giga chads and shit, right? And then we go off to crypto, and then like we're like the giga chads next to these dorks in crypto.
Just Google Ethereum Denver conference and be ready for a boatload of cringe, bro. Oh my. Anyways, answer the man's question.
So yeah, you're 100% right. That's basically how it works. Most coins, one cycle, pump and dump, done. That's it. Even projects, when they're trying really hard, the whole thing is that whole community side, that whole religion side. Like you there is sort of a religion side to it. You have to build up a community big enough and a belief in it. If you didn't have that with Ethereum would have failed. If there's people that are like, I'm an Ethereum maximalist, I'm a Bitcoin maximalist, I'm a Hex maximalist, I'm a Litecoin maximalist. You need these people who are like, nah, this is going to survive. Those are the people. That's the backbone of the community that keeps it alive. And that's why when a coin doesn't fail and then it comes back, they get greatly rewarded with pretty much riches. They really do. Like people who believed in Ethereum early on, like they pretty much, if anyone who was early in Ethereum bought it at between 50 cents to $5, it went up to 1,400. Crashed to $80. They could have sold their coins and left it, but instead, if they held their coins now, it went up to what, $5,000. So imagine that stuff. It's like the sort of thing. Like a lot of people always drop. It's sort of this famous quote and stuff. Like during the 29 crash, we owned half of Manhattan and stuff. But your uncle fucking sold. Sold like dropped the land and stuff because he was like he lost faith in America or something, right?
He needed the money that day. There's
like all these classic quotes from Mad Men. If you've ever seen Mad Men, I love Mad Men, but there's a lot of quotes like that, right? Well, with Hex, it's pretty much shown. It's what they built was a hyper strong community. That was the main thing. Most other communities, they just focused on influencer marketing versus grassroots marketing, right? So basically, what ended up happening is like I was actually one of the first 4 YouTubers for Hex ever. So it was me, Hexologist, Crypto Coffee, and RG3. We started the first 3 crypto channels for like Hex and stuff. I was on there. And basically we were streaming just for fun. Basically, it was like, heck yeah, let's talk about this thing. And then what we did is like, hey, you guys go make your own YouTube channels. And like we helped a bunch of guys out. We helped guys get like remote. I mean, literally, it was like it was complete. No one gave us money. No one told us to do that. We just did it ourselves, and we ended up building the largest YouTube community in all of crypto for a coin. Period. Like there's no more there. You can look it up. Right, we have the most Twitter accounts for a crypto coin. We have the most YouTube accounts for Twitter for a coin in all of crypto, period. We got more channels, even Bitcoin maximalists. It's that crazy. So that's one of the reasons why, like, when this coin hasn't died off and stuff, and why people still believe in it, and it's because people are hanging out. Like, we're going to be here back in Miami, I think May 18th for the Bitcoin conference. The fucking the Hexicans are throwing a rival fucking party there too as well the same days, just to give it to the Bitcoiners. Why not, right?
And yeah, and to answer the second part of that question, right, then that leads to PulseChain, because the success of what Hex did there that Miguel's mentioning, right, like you said, Sterling, right, leads into what Richard Hart's doing this cycle. And the simplest way to put PulseChain for people, right, is essentially it's a way to make transactions in crypto a lot more efficient, right? And so and then it's leveraging the Hex community and the tokenomics of what Richard Hart has done in the past as well, to basically have a very good price appreciative ecosystem, I guess is a nice way to put it, right? And so that's one part of it. Another part of it for PulseChain, which is really important, is that they did basically a fair launch. And what does that mean, right? So like in traditional crypto coins, they do either an ICO or seed rounds, right? Usually what that means is they do 2, 3, 4, or even up to 5 rounds before it goes like to the general public. And so it's a little bit of a, not a Ponzi, but like it's a little bit of a friends and family is the core of the onion, right? And then you have like network connections, and then you have boom, boom. And so those are the people that use exit liquidity and all that stuff, right? Whereas for PulseChain, right, when you've basically could get into the early phases, it was open to anybody on this whole planet, right? There was no limitation based on who you knew or anything like that. And so, there's a lot of crypto coins that don't do that, right? So that's one way that you can understand, okay, this community is doing well by its own people, both for the people who have $30 million to invest as well as the people who only have, maybe a couple hundred.
Right. And that fair launch thing is the crazy part, because we've been in crypto since 2016, and I think I've only seen maybe 4 fair launches in the 7 years I've been in crypto. 4.
Damn.
And they tend to be very profitable.
Extremely profitable. So the average L1, so something like, I'll make an example, Phantom, Cardano, Binance token, it's its own L1 tokens, right? The typical return, that means like average Joe returns on these coins when through a cycle is 100 times on your money.
Not bad.
For new ecosystem coins, that's nice. And then that's just the main coin of the ecosystem too. Right? You get all these other coins built underneath it, and if you can recognize the ones of quality, right? I mean, you can make more than that, and it's like, shit, more than 100x is possible. Like, that sounds not too bad, right?
Yeah.
I mean, Hex itself. Now this is like if you did like 100x is if you did everything perfect. No one does that really. There's a couple guys, yeah, a little bit of your money does it, but like realistically, most people probably got 30 times on the money. Realistically, right? With Hex, right? If you did the absolute bottom, absolute top, right? Basically every dollar I invested turned into 10 grand, right? So I did get to take part of that, but it wasn't like that wasn't my like all the money I just bought right there. It was like spread out. So it was more like for what I would say for my investment in Hex, it probably was for every dollar invested I made like $3,000, something like that. Not bad, right? Hey, I'm not doing real good right now, but it's okay. I'm eating, but but the average coin, right? Like something like Phantom, it went from 3 cents to $3. Cardano, a penny, $3. You had Binance token go from literally 50 cents to well over like $800 at its top. Craziness, right? And these are the gains. This is why people are so excited with crypto and stuff, because you can actually like get into it and it's a fair launch. So the problem is like what Charlie said right there, is most of these coins launch, like by the time you hear about it, you're already getting in at $1. Right. You're getting it at 50 cents instead of getting it at a penny or 3 cents. You still do okay, but then you have to realize and this is where we help people out a lot, is like, hey, you guys, you're not getting in at the VC level anymore. You're getting over, like right now it's VC level. Right now it's like, that's where we're fucking like banging the war drums and like doing everything we can to tell people. Like we were screaming as loud as we could last November when we were on Fresh and Fit. We were doing the last run for the course, because we were telling guys, this is the low. No one else had the balls to say that besides me and Charlie. We were screaming it to everybody. We got, you bought, Fresh and Fit bought, Jay Waller bought, every the who's who of the red pill and the red pill guys that are following us all bought right now. Rolo bought, everybody bought, and everyone's up right now. Like our average student right now from November is up 2 to 5 times on their money that they started with. But it's a bear market, and the economy is bad, and my dick don't work. It's just it's real tough out here, but I heard Sterling has a course for that. Shout out to Sterling.
Well, Miguel, tell them how they can get some free coins, because PulseChain has not launched yet.
That's another thing I was gonna ask you about, was like the it's gonna be the biggest airdrop in history.
Yep.
Yeah. So basically, imagine like someone takes just a photo of you with a good old Kodak. They take a snapshot of you, right? They take a picture of you. What happens is whatever coins you own during the Thanos snap gets copied over on the next network. So you'll have, if you have Hex, you'll still have your Hex on Ethereum, but you'll get a free copy on PulseChain. You have Ethereum, your Ethereum's going to copy. Everything gets copied over one for one, right? Except for Ethereum. Ethereum gets kind of diluted down. It's because they want to give a lot of the Ethereum whales some PulseChain, but they don't want to give them so much that they can fuck up the system. This is like if there's ever this is one of the biggest mistakes people do when they make coins, is that they want to give a bunch of free coins to people in order to get people into the system, which is a good idea. But here's the problem, is that you can't give the whales too much free coins, because what they'll do is, and this is a very famous example with Bitcoin Cash. Back in 2017, Roger Ver started Bitcoin Cash. He was Bitcoin Jesus, and he said, "Screw this shit. I'm doing my own Bitcoin that's better." And what he did is, everyone who owns a Bitcoin, I'm going to give you a free Bitcoin. So whatever Bitcoin you have the same amount of in Bitcoin Cash. The problem he did is he should have said anyone over 100 Bitcoin doesn't get any. He should have gave all the normal people, and it would have worked very well. But what happens is he gave all his enemies the ammo to kill him, basically. So it came out, it pumped to $2,000. Basically, it went to 25% of the market cap of Bitcoin. And then these guys dumped it on his ass and nuked the coin, and it's been going down ever since and stuff. And basically because he gave his enemy too many coins. So there's a lot of people out here jealous, and it's just like it's almost like there's only limited spots on the football team. Some of these guys on the football team are making sure that some of these rookies don't come up.
Yeah,
because that puts them out.
There's an important question about that. Do we link our MetaMask to something for the snapshot, or does it know what you have? So
it knows what you don't have to do nothing. You don't have to do anything at all. The only thing you have to do is just have all your coins on your MetaMask or Trezor or Ledger.
Yeah.
Not on Coinbase, not on Gemini, not on Kraken, not on Binance, not on KuCoin. Just have it in your custody and you're good, bro. And then as soon as it launches, you just click on this website and then it'll give you like a network, and you'll be able to like log in on the MetaMask. You'll be able to go from Ethereum network to PulseChain, and your coins are right there in your wallet.
And the reason why, it knows that is because basically the blockchain is immutable and records all those transactions continuously. So as long as you have your private keys, you're good.
Yeah, exactly. All right, sweet. I'm glad we talked about that and gave everyone that, because to me that was like that is one of the most important pieces of information that's going to be coming out this year. Is like, because we don't know when PulseChain is dropping, but we can probably assume it's going to be sometime later this year.
Yeah. And if everybody listening right now, doesn't take any of our products or services, right, but understands what's happening with PulseChain, that can literally change your life if you really understand it.
Yeah, exactly.
It's being early right now because right now, look at the economy's kind of bad right now. Everything's not so great. But pretty much what's going on is this year is going to be a nice pump, then it's going to go back down, and then we start heading back up, and then we go into the election year, right? We got the Bitcoin halving happening, right? We have Litecoin halving happening this year. Then we have the election, the election that's starting. That's going to mean the whole circus that's going to be with like Biden versus Trump. That's going to be awesome. But what happened? You saw the stuff that happened recently with the banks, like the Silicon Valley Bank and the bank run stuff that happened with all the banks recently. What they did is the Federal Reserve and the FDIC essentially created this special account that when you increase interest rates, you hurt bond prices, right? So these banks are like super they're pansy ass girls, bro. Like they take no risk at all. They're trying to buy the most safest stuff. They take your free money, they leverage it up, and they buy like the safest yield stuff, right? But what happens is when the Federal Reserve is increasing the interest rates, it ends up killing the price of their bonds. So if you pay $100 for a bond, if I increase the interest rates by 400 points, I nuke you down. Your bond's only worth $65 now. So they have these massive billions of dollars of losses. So what the new program that the Fed did is, if you have losses and your clients are asking for their money back, you just deposit the bonds at us. We'll print you the money, and then you give it back to everybody. And basically what that is, anytime the bank is in trouble, they can just go to the Federal Reserve, print the money back, give it to you guys. Then they're unburdened. Now their balance sheet looks incredible. Hey, time to get loaded up again. Let's buy some more. And this is the start of this brand new sort of weird little cycle where these banks, these banks can essentially, anytime they get in trouble, pass off the bad assets to the Fed, get new ones, and let's go again. Time to re-up at the casino. It's like basically, I lost all the money at the casino. Let's go to the ATM, baby. Let's go. And we head to the
One of the reasons why that doesn't happen as often in crypto is because we let companies go bankrupt in crypto.
Yeah.
Right. Some companies will be basically absorbed. Like, for example, Binance recently bought Voyager, right? So they'll take their team, they'll take their data, and they'll absorb it into their company, but it's not going to be its own company, right? They'll have to rebrand it or just absorb it into theirs. Versus, right, in the stock market, they'll have a few sacrificial lambs, but for the most part, right, it wasn't so bad. We'll give you a slap on the wrist and come back, bro.
Yeah, nothing is too big to fail in cryptocurrency.
Right.
Correct.
The only thing that would be this is just like the craziest scenario is if let's just say Bitcoin, there's a major bug and they crashed real bad and they had to do a hard fork and stuff. That would send us that's the only thing. Like if we had something bad happened with Ethereum or Bitcoin, instantly that would send us into a bear market. But even if the number 3 coin, Binance coin, went to zero, it would hurt the market for a couple of days, but Bitcoin and Ethereum would survive. Yeah. So, but even if Bitcoin and Ethereum, something happened to Bitcoin and Ethereum, we basically reset for about, we'd go into about a year and a half bear market, reset, we'd come right back up.
Yeah.
And that's it. So basically, if we ever get hit with a knockout punch, we're like the honey badger. We don't die. We just keep coming, basically.
And that's a great time to buy. That's all I have to say. Like that's why I bought in November. I'm like, everything's crashing. This is a bottom. Great time to buy. And I don't think you may be like something like 60 grand, bro. Like off of like, and that's off what is unstaked, not what's staked.
Not what's staked.
Like,
and Sterling's a man who pays his taxes.
Sterling's a man who pays his taxes, of course. Yeah.
Anyone who's from the IRS did not hear that. But that's why I have you guys on, man, because it's like you guys, I've always been, consistent with the advice that you've given me, and it's always paid off real well. And you've never steered me in the wrong direction. You never tried to have me buy into some shitty Ponzi scheme or a pump and dump scheme or anything like that. And I know that's the case for all your students too. And I know your students have tremendous results. So that, to me, it's kind of like a no-brainer, having you guys on and introducing you to my audience. So for those, so maybe like I'll let you jump in what you were going to say there, Charlie. And maybe you can shill the crypto mindset course shamelessly one last time.
Sure. Well, one thing I'll say is like I like the guys in your chat. They're having a good time here. And we like to have a good time too, right? We basically, when everybody's in the course, we often put the course at a very advantageous point in the market so that you guys can buy, right?
Yeah.
Literally yesterday, I pinned a message in the chat, basically of the crypto mindset course. And, we don't have everybody in there yet because, right, people are still buying, people are still coming in basically. But, right when Bitcoin basically got to about 28,300 on its daily close yesterday, right? It flashed us quite a few signals and basically said, okay, we have a very good chance that a low is in for the last 60-day cycle. And we're starting a new 60-day cycle, which means basically at least the next 10 to 14 days, right? We have more upside than downside. And over the next 60 days, we have probably, if we go up past day 30, right, we often have 45 to 55 days of pump, right, which would bring us into mid to late June until we get like that next little bit of a pullback. And so I mentioned that yesterday at about 28,300 or just as we're getting to 28,000. And literally over the last, 20 hours, Bitcoin's now gone up another $1,000, almost $30,000 again. So we really, tried to give you guys, a little bit of fish here, right? And be like, hey, now something is happening, right? And what I put in that message was buy as much Ethereum as you like. You could buy as much as you want under $1,900, right? Just stack it up over the next 2 weeks and then, wait and see what happens for the rest of the 60 days, right? And then you can do that for other coins in the market that you understand, but not everybody understands. So stick to Ethereum, or Hex is also at a very good opportunity. So go in there. So that's some free information because that still is like legitimate information. So you can still buy, right? Some people are like, oh, is it too late? No, as long as Bitcoin's under about $33,000 and Ethereum's under 2,300, still not a bad time to basically dollar cost average or buy some. So that's a little bit of extra juice for you guys right now who are looking to buy in the market, who might not be in yet or might not be able to get in for whatever reason. But for those of you who, want to jump in there, really want to build a foundation, right, for your cryptocurrency knowledge, I'll literally just tell you, what the process is to get in. And then Miguel, if you can kind of tell them what's all entailed in the course and everything. And I can share the schedule here with you guys too. We could talk about that.
Can I say one thing before you say on that? I just want to show you guys the reason we were saying like 33,000 and 2,300 for Bitcoin and Ethereum is because we want you guys to get in below those prices so you can lock in those easy multiples, right? Basically, Bitcoin and Ethereum within basically late 24 to 25 in that range there. We're going to see somewhere between $100,000 to $150,000 Bitcoin, and we are going to see somewhere between $8,000 to $14,000 Ethereum. So if you're able to get into Ethereum at $2,000 flat, or even right now it's $1,900, but let's just say $2,000, that you can lock in basically seven times on your capital. You can lock in a 5 times on your capital on Bitcoin. That's what Bitcoin and Ethereum, that's like the safe money. Then the long-term money. And then on top of that, if you're in any other more riskier coins, you can do extremely better than that. But that's your anchor. So if you like, this is why we tell you, if you want it, when you start off, you always want your portfolio to be heavy in Ethereum and Bitcoin, 50% at least, and then you can play with the other stuff a little bit and stuff. And that's one of the big reasons why we're kind of screaming right now, you guys, this is where you can get these multiples right now, the easy multiples, because later on you have to play out more. You have to go farther in the risk curve in order to get returns. So there you go.
Yep. And so in terms of let's say you're like, okay, I want to jump in here, right? As you're seeing in the chat, right? Some of these guys who just jumped in are already up like 9% on that move. So, okay, let's come in, make a foundation, understand this stuff, right? So how do you get in? Basically, the way that you get in is Sterling has a link there in the chat as well as in the description box below, which basically leads you to cultivatecrypto.com. And then it'll mention Sterling's name there. So make sure that that's there. And then all you need to do is just add to cart. There's like a million ways to pay. You can pay by Google Pay, Apple Pay, PayPal, PayPal credit. But what we recommend is either credit or debit if you're going to pay in cash, right? And so you have all those options. Great. Let's say you want to pay in cryptocurrency. We give a 15% discount if you pay in crypto, even though it's pumping, right? Because we want you guys to basically understand how it is to use cryptocurrency as well. And so if you want that, right, just email us support@cultivatecrypto.com. In the subject line, right, Sterling Cooper. In the body, just say, hey, I saw you on the channel and I would like to pay in Bitcoin or Ethereum, right? And then we'll send you a link to pay in crypto, and basically, you're good to go. So once you've paid, sorry, go ahead.
I'm good.
Okay, sorry, I thought I heard something. But so once you've paid, right, then within 24 hours from our support team, you'll get an email from Charlie@cultivatecrypto.com or support@cultivatecrypto.com. So make sure to whitelist those in your email. If you don't see it, right, it might fall into your spam or promotions folder. So make sure to check there as well. But within 24 hours, you'll get the introduction email to our private Telegram group. The reason why we do Telegram is because it's an encrypted service, right? And crypto is an encrypted technology. So we go towards that. And then you can get in there. Boom. Now you can see that pin message we put in there yesterday. Happy days. You can talk to a lot of people in the course. We have a lot of veterans in there. But we also have a lot of new people, and everybody's helping each other to figure it out. Like if you know nothing about crypto and you're like, how do I open a wallet? You ask that in the chat, boom, you got like 20 people telling you good information, solid information, how to do that. Right. And then also we have 5 pre-recorded webinars, which will basically teach you that. So you'll have access to that over the next 2 weeks because we'll begin webinars on May 6th. And so that gives you, some stuff to chew on. And then we're active in the chat. We're pinning messages, alerting you guys to what's happening in the market. So it's very active, a lot of fun, but you get out of it what you put into it. So be sure to engage with the chat. There's no such thing as a stupid question. Just ask away, right?
Right.
And then Miguel, do you want to go from there in terms of now once they're in the course, kind of what do they get out of the boot camp course, whatever you want to call it?
So I just want to start off with one thing real quickly when it comes to the courses and stuff. The reason that why we always get invited by every channel under the sun, from finance to sex to sexual dynamics, red pill, everything, is because money is energy.
Yep. And
who the hell doesn't like to make money? So so this is why, right? So when you sign up to the course, basically it is 16. We just added an extra webinar. I'll talk about that in once. Whoa. Is that Sterling?
Yeah, there's a technical glitch there.
Oh, okay.
Camera.
Okay.
Can you hear us?
The Matrix didn't like this, man. The gains.
Damn, bro, that's not good.
Turn my camera off for a second. Switch up the cameras.
Yep. So okay. So basically, we have 5 pre-recorded webinars that we release to guys once they sign up in order to kind of get them onboarded, for them to understand how to basically send transactions, move money here, move money there safely, which exchanges to use. Basically the ABCs of how to really starting up in the crypto space. Then from there, we do 15 live webinars day and night for about 2 days on, 1 day off, 2 days on, 1 day off. So they're 4 hours in the morning at 7 a.m. Pacific Standard Time and 7 p.m. Pacific Standard Time. And that's 10 a.m. Eastern PM basically. And basically on with these topics and stuff, we go over literally everything from A to Z. We'll basically turn somebody who's a complete novice into an intermediate in the crypto space. So we get you to the point where you're wheeling. Basically, you go from knowing nothing about crypto to the point where like you're wheeling and dealing, yield farming here, moving money there, staking, not staking, just buying and hold. Depending on the strategy, will help you essentially learn everything you need to know from fundamental analysis, technical analysis, on-chain analytics, and on top of the memes, of course. The memes, we got to teach you about memes because this is now like it's become sentiment. Like it's sentiment as well as it's become like sort of like the 12th sector of the S&P for the crypto side is meme money. Culture, yeah. And teaching you all these L1s, what's safe, what's not safe. We tell you kind of like, hey, you know, we've walked these paths. This one's really good for a coin, for the main coin, but the ecosystem sucks. The main coin sucks. The ecosystem's awesome. And if I'm speaking gibberish, sign up to Crypto Mindset because we help you decipher it all.
Yeah, and the last thing I'll add to that is because I don't know if we highlighted it, right? But like I said, we get the 5 pre-recorded webinars, but you get 15 live webinars. We actually just yesterday on our channels, we announced that we're adding an extra live webinar. So we're doing 16 live webinars in total, right? And then that's from May 6th until the 21st of May, from 10 a.m. and 10 p.m. Eastern on the days that we have on. And then we have off days in between there. So you can have some spaced repetition, have a little bit of rest, review, and then, you know, really understand what we're going on, and then get some Q&A in there and then move forward, right? So there's a lot of stuff there. But then once we finish the webinars on the 21st of May, we don't stop supporting you, right? We continue to support you guys in the chat and everything. But then we do these things called flash webinars, where sometimes we're like, oh shit, the market's moving a lot. And yeah, we can talk about it in the chat, but it's a lot more effective to do another webinar for you guys. Sometimes we have a guest come in, right, that basically we're talking to that wants to, you know, willing to give information to the group and everything. And so, yeah, we have a lot of good stuff there continuing throughout the quarter to make sure to support you guys. And then you always have access to the recordings. The recordings are timestamped, so that way you can go to sections that you need to. And yeah, let's say, for example, you're on a 9-month journey to purposely understand crypto, right? You can literally take this course and then use the material for the rest of the year, right, to study. And it will, for most people, if they take it, you know, seriously enough to, you know, spend maybe 2 to 3 hours of it on that per week, every single week for the rest of the year, right? They will massively do well in crypto. We've seen that time and time again. And the minimum thing, I think, if you really understand this and take advantage of it for the long term, right? You take the knowledge now, and that's going to help you over the next 2 to 3 years. Not only are you going to be ahead of the curve and save 2 to 3 years of pain trying to understand this yourself, going all over YouTube and, you know, hitting up, you know, bad channels and stuff. But also, right, looking, you know, that's the downside. That's the risk if you, right, don't take advantage of that. So we save you a shit ton of time. But then on the positive side, right, we add zeros to people's bank accounts, right? And what I mean by that is if you spend that amount of time per week, 2 to 3 hours per week, right? And you understand this, because like the course is where you get that foundational knowledge. And then that minimum time per week is basically how you keep momentum going, right? And as you keep momentum going, right, that's how you get rich long-term in this game. And so we would say for most people, we've seen this a lot. If you're actually putting in the work and you're paying attention, if you're starting with $1,000, right, within the next 2 to 3 years, we'll add an extra zero there. You'll be in the 5-figure range. So anywhere from $10,000 to $99,000, right? And then if you start with $10,000, we'll get you to the 6-figure club, right? So a lot of people get to that $500,000 phase just on that, right? Like $10,000 or $20,000 in the market. If you put $100,000 in the market, you get into the millionaire, multimillionaire area. If you start with $1 million, ooh, baby, we're going to get you good. So, you know, there's and we give different strategies for people at different levels, because let's say, for example, somebody only has $1,000, right? Realistically, you should probably only be getting into 2 to 4 coins max. Whereas somebody comes in with $1 million, oh man, you're wheeling and dealing. We can get you going real good, but you want to start safe, start simple, and then add on top of that once you understand what you're investing in.
Definitely.
Oh, you're muted there.
Yeah, muted.
Sterling, you're muted.
It's the Matrix, man. I'm telling you, man.
Yeah. Well, we're here for the assist. to keep it going.
Let's see if you can hear me now.
Yeah, no, we can't.
Yeah, definitely matrix attack. Got nothing to do with my capture card. Nothing at all to do.
No, of course not. It's the Matrix, bro. For real.
All right. Well, at least it happened at the end. Cool. And so just to recap a few details. So the course the actual webinars run from, you said, May 6th until
the 21st. Oh, let me show you. Could I pull up the schedule and we can share it on screen?
Yes, exactly. Perfect.
Okay, perfect. So here, let me just do this, and once I got it up here, then you can share it. Let's see here. There we go. All right. Tell me.
Buy Ethereum and Bitcoin now, or you're gonna be poor.
Got it.
tell me when you can see this.
Got it.
I can see it. Yeah.
Yeah. Cool. Okay. There we go.
Gotcha. So yeah, here we start on May 6th, right? We have that 10 a.m. and 10 p.m. Eastern every single day that we're on, and then we have some off days. So we'll do 2 days of webinars in a row. We'll cover basically, we always start with our Q2 2023 thesis. So we always start with that quarter and then bleeding into the rest of the year. What is our thesis for where the market's going, what we think it's going to do? If we get like a curveball, how could that affect things? All that type of stuff. We tackle that at the very beginning so that you guys have a baseline for where we're going, right? And then here we have a top 25 coin list, which is coins in the market that will have a good shot at outpacing ETH, both now and then sometimes as well over the long term. And then here we got the hottest coin list, which is for right now in the market, where can you make really good money? Not necessarily like the most money, because like there's some coins which you don't want to get into because they're like basically pump and dumps, but like in a responsible way, right? What are some of the hottest coins there? And then we make sure to give you guys risk management as well, on top of that, right next to each other within, a few days after some Q&A. So that way you, protect your downside and watch your six basically. So that's where we start. And that's just the tip of the iceberg. And then, like you said, we go all the way through the 21st. This is a tentative schedule, may adjust a day or two there. But yeah, we usually go 4 webinars on, a couple days off, 4 webinars on, a couple days off. Here we got 6 in a row, a couple days off, right? And then we got these. So yeah, Miguel, did you want to mention anything else about any of these other topics that we have going here?
No, definitely. So one thing that we're really proud of ourselves is we're one of the, I think we're like literally the only guys actually talking about crypto taxes. So yeah. we shout out to Steve from accounting. This is actually Fresh and Fit's actual guy who does even their taxes and stuff like that. Steve took our courses secretly, actually, may I add, secretly took our courses for about over a year. And then just out of nowhere, it's like, hey, Miguel, Charlie, I work with Fresh and Fit and stuff. Hey, what's going on, brother? And then, we did a couple streams with him and stuff. And, we ended up we're actually working with him. And a couple other guys were essentially going to make one of the first ever kind of crypto like tax services as well. But that's something that we're working on in the future and stuff. It takes a while because you got to really do that by the book. But we're the only people actually being able to give like decent like information about taxes and stuff, and like how to set yourself up right, as well as other ways, maybe even capitalizing on real estate. Because this is one thing that we do is like because you can make a lot of money in crypto. At a certain point, you should actually invest in some real estate at some point. It's actually a smart thing to do. There's a lot of tax advantages for it, as well as it's a great way to create a secondary income. So because crypto is so volatile and it grows so quickly, real estate in the portfolio eventually is kind of like adding that granite foundation for yourself in order to keep stepping your way upwards and stuff. And it's a great way to do it. But from there, we're talking a lot about GameFi and AI. That's going to be a really interesting one, because one of the big things for this cycle is going to be video games, believe it or not. Video games. So it's going to be a lot about AI, video games, and the metaverse, and that's got a little bit of NFTs mixed in there and stuff like that. And every course we end up bringing some people, coin founders or just people that are really important in the industry into the course to come talk to us and stuff, and talk to the guys. And you really get that nowhere else, because a lot of these token founders won't give the normal guy on the street time of day, bro. So we actually can get in there where people then can ask the actual creator of something legitimate questions, and sometimes critical questions like, hey, bro, why'd you do this? That seemed kind of messed up. Well, okay, I understand now. Or, damn, he's an asshole. Shit. Just being for real, you know, it's all that sort of stuff, man. But that's the beautiful thing. I mean, we've been able to help over 13,000 people. I think right now, currently, we have over 730 people in the course right now and climbing and stuff. So definitely sign up right now, man. It's
There was one question in the chat here that I just want to mention. TY says, will you learn other ways to make money other than crypto? So one thing we preach is multiple streams of income, right? So Miguel was talking about real estate there. We also talk about, you know, like sometimes there's a lot of people who are like, you know, how do I get started in sales, or how do I get started in marketing? How do I get started in tech, or, you know, stuff like that. Like, you know, I have that recruitment background, and basically, you know, we're happy to give you guys advice on like career trajectory, side hustles, gig hustles, stuff like that. But you have to ask us those questions, right? We have so many Q&As, so many things where you can ask us anything. That ask a lot of those questions, and yes, we'll cover that.
Yeah, awesome. And then the link that I'm currently dropping in the chat, that sign up link ends midnight Friday at midnight Pacific Standard Time. So it'll be Friday what's the date?
What's that? The 28th.
The 28th. Yeah. So we've only got a couple of days left, because I believe there's a few other, like, the other links that are out there on the internet right now kind of end today. I believe that's correct.
Yes.
But you were very lucky. You were very generous to extend mine a couple of days. So you're lucky you watched my stream, because you can still get in.
Right.
And for those guys in the Moon Gang, right, who are watching this tomorrow, right, there you go.
Yeah. If you miss out, go use Sterling's link. We'll send people your way for real. Yeah.
There you go. All right. Cool. That's we've covered basically all the key points that I wanted to hit on. I'm really glad we got to, you know, give everyone a little bit of free advice on things like PulseChain and the airdrops going on there, and then the general direction of the market right now, and the price points you guys are looking at right now. So hopefully you guys were able to take something away from this. It's a little bit different from my normal content. I think someone mentioned that in the chat before. But the reason I have these guys on is because I trust them. I literally follow their instructions on you know where and how and why to invest in certain projects, and they made me money. So I don't see any reason why I would hold that back from everybody who follows me and supports me on YouTube, because I want everybody to win in every facet of life, not just the bedroom, not just relationships, but like you said before, Miguel, like financially, like money is energy, and everyone wants to make more money. So why the hell not?
Right, man. I'm telling you this right now. I mean, I've literally paid for cars and my house and stuff and everything just with like crypto gains. And this is not even with my main coins, just like side bets I've made and stuff. And this is how you do it. Like you can take like a $5,000 investment into a coin, and I've been able to pull out, you know, something like 600 grand, you know, $100,000 off of some of these investments and stuff like that. And it sounds fucking so crazy, but like, this is like our third rodeo around. There's like a cycle every 4 years. We're in the 2017 cycle. We're in the 21 cycle. Guess we're in the 24, 25 cycle. Like, I'm telling you, like, this is the ride. But the thing is the later and later time that you wait to get into the crypto space, eventually at some point it's going to slow down. It might slow down in 8 years from now, but at some point it'll still be really great, but it's not going to be as explosive as it used to, because we will get regulation and stuff in the next 8 years. So it's like, it's kind of get in now or stay poor.
Yep. Don't forget to take profits.
Yeah.
Most importantly, make sure you actually take profit.
Yep. A lot of people, they don't, right? So like that thing I mentioned, like right now is basically the time to buy, right? A lot of people do that. They'll forget about it. They'll come back, you know, several months later, and they'll just be like, ah, shit, bro. So paying attention is the key to the game.
Yeah. All right, boys. Thank you so much for coming on. Hope everyone watching, you know, got something out of this, and we'll see you guys next time.
Thank you.